even after adjusting for risk, female-managed funds outperformed their male counterparts amid the coronavirus-related market swings.
All right, for more on this, let's hear from Roy Gluckman. He's a director at Cohesion Collective in Johannesburg, South Africa. Really great to have you on the program with us to talk about this, Roy. So what do you think is going on here? Clearly women do well in the financial industry, but is this just people haven't figured this out yet? Why don't we have more women in investing if that's the case?
Yeah, I mean, it's a great question. And I think that, when we look at industries generally, they often have a gender and a type, right? So marketing, PR, HR generally seen as female kind of feelings, those type of spaces, right? Those industries. But when we look at the technology, innovation, finance, investing, those tend to have a more male feel, right? And this has obviously been constructed that way. So really, I think that just from a feeling in terms of how it is we're pulling women into some of these industries, not only from a pipeline perspective, but also retaining women in these industries, thinking about organizational culture, and of course, being deliberate about attracting, retaining, and promoting growing women within these industries. It's really just about shifting some of the awareness. And I think that studies like this highlight the importance of doing that. So hopefully kind of drive some of the impetus to continue in driving gender diversity in particularly male-dominated industries like investing.
Okay, so the big question then is, how do we change that feeling? Because it does seem like an old boys club. And I know that representation of women in portfolio management roles hasn't changed in the last 20 years, since 2000, even though fund management companies say that they want to have more diversity in their companies. So what are they doing wrong? I mean, how do they go about changing that messaging and recruiting more women?
Yeah, I mean, talk is cheap, right? And everyone's got a diversity strategy, and everyone's driving diversity. But the proof really does lie in the pudding, I think, when it comes to this in particular. But when it comes to investing, I think when we think of some of the fundamental drivers is around trust and safety. And I think that's where we get tripped up, because still we would say that somebody who looks like me is somebody who I'm automatically going to trust, who I'm automatically going to see as safer. So if we have more men in fund manager positions, by that implication, we are already going to trust portfolio managers to be people who look and think and feel like us. So because the currency, the virtual or the human currency is trust and safety, we tend to kind of veer on that socially valued masculinity as something which is a safer bet in those very kind of lucrative and often high risk spaces. So it's really just about broadening what we find and questioning what we find to be automatically safe and trustworthy, and saying, well, maybe there's something else here. And I think with the results, and that's why it kind of made me smile to read this report, it's amazing to see that we now have more evidence as to why this is important. And I think, unfortunately, and this is really it for a lot of the inclusion work that we do, we sometimes have to find that bottom line imperative to change, because I just don't think that, it's the right thing to do is kind of building that momentum and building that need. So it's lovely to see kind of bottom line, hey, here's what we need to be doing, and this is why. Hopefully that will kind of push a lot of men over the line to be thinking seriously about gender equality within the workspace.
Yeah, hopefully. Aside from making more money for individual investors and the companies themselves, how do you think the industry can benefit from gender diversity in other ways?
Well, I mean, I think it's just in terms of families, in terms of opening up economies, in terms of opening up markets, in terms of creating more jobs and more access. I think that's always important to grow the industry or any industry in all directions. So, kind of expanding who it is we want to bring in and develop will also expand how money trickles down, how resources and access trickle down to families and extended families, and particularly in parts of the world, in parts of the world like South Africa, a lot of female-headed households are the sole breadwinners. So these have very, very big socioeconomic impacts by empowering women outside of just the right thing to do. And also clearly, better decision making, which I think is actually the reason why we have these female-led funds outperforming some of the male funds. I just think it's all about decision making, and there's wonderful research to show that quality decision making is actually based on the quality of our relationships. And I think that given some of our corporate spaces, women have been socialized to be more collaborative, to be less risk averse. So I think that is coming into a positive way of how they make decisions and how decisions are made. So those quality relationships are really impacting the quality of actions and decisions, which is great news.
All right, you make some excellent points there. And it is true, a lot of women are sole breadwinners. I'm one of them, and people always have a hard time believing that. Roy Gluckman, thank you so much for your time.